Okay, good afternoon, and thank you so much for joining us today for the Business Law Weekly Series. Good afternoon. I see some people are still joining us, but of course, in the interest of time, we're going to get started in just a second as our panelists join us and turn on their videos. Thank you so much for joining us today, everyone. Fantastic. So we're here and ready to kick things off. So this afternoon, we have been joined by very brilliant professionals. We will be discussing Nigeria's banking recapitalization, understanding the M&A and foreign capital imperatives. I welcome you this afternoon on behalf of the Mergers, Acquisitions, and Corporate Reorganizations Committee of the Nigerian Bar Association section on business law. I think we're very honored to have the chairman of the NBA-SBL here with us. And I'm sure she's going to give us quick remarks just before I go on to introduce our panelists to get started. So I'm going to hand over to our chairman right now, Ms. Ozofo Latinel-Gemodia.
Good afternoon, everyone. Thanks, Bukola, for putting me on the spot. I was planning to sneak in and stay quiet. It's a pleasure to have our distinguished panel. When I saw the lineup for this session, I thought we're really raising the bar. So thank you so much, Mr. Alabi. Nice to see you again. And Mr. Daniels for being with us. Of course, my darling partner, Mrs. Edu, thank you for honoring us, and our able chair, and her vice, Kunle, thank you so much for putting this together. So without further ado, and not to take up more time, because our time is limited, I'll hand it back to you. Thank you.
Thank you very much, Chair, and of course for giving us the platform to do this afternoon with our distinguished speakers. So really quick to it, we have three solid people on our panel this afternoon to discuss the M&A imperatives of the banking recapitalization, which we all know is going on. And of course, I'll start by introducing Mrs. Edu, who is our moderator and panelist today. Mrs. Inka Edu is a partner at Udodoma and Dele Osage, where she heads the banking and finance, capital markets, and fintech practices. She has a distinguished career in financial law, and she's established herself as a trailblazer in Nigeria's legal and financial sectors. I'm a lawyer myself, and I'm sure the rest of you on this call, we all know who Mrs. Edu is, so she needs no further introduction. Thank you very much for joining us, Mrs. Edu. Next up, I'm going to introduce Mr. Suru Daniels, who is the managing partner of Afro-Invest Capital Limited. He leads a team of investment banking professionals responsible for originating and executing financial advisory, mergers and acquisitions, capital raising, and structured finance transactions. Right, these guys are at the forefront of a lot of the biggest deals we see. So I'm sure he's also a household name for a lot of us. He's advised corporates, governments, and individuals on transactions spanning beyond Nigeria as well. Thank you so much, Mr. Daniels, for joining us this afternoon. It's a pleasure to have you on. Next up, thank you. Next up, I will introduce Mr. Femi Alabi, who is a partner and the service line leader of strategy and transactions at Ernst & Young, EY West Africa. His area of expertise includes mergers and acquisitions, valuations, due diligence, feasibility studies, amongst others. He has over 21 years of experience providing advisory across various sectors of the economy, especially the financial services industry. He's worked with various clients, from government to private institutions to institutional banks, amongst others. So I am sure, Mr. Alabi, thank you for joining us this afternoon. It's a pleasure to have you.
Thank you very much.
Excellent. So I'm sure, as you can all see, we brought out the big guns this afternoon. I am going to hand over to Ms. Dejo so we can get started. to delve into, the wealth of knowledge they had to share this afternoon in a very short time. Mrs. Edu, over to you, and we're looking forward to an exciting session. Thank you.
Thank you so much. I'm excited to be here. Thank you. And I'm particularly excited by the panelists myself, Femi Alabi and Suru Daniels. I think that as lawyers, we're all learned. And as far as we're concerned, nobody's more learned than we are. So, so it's nice to have, so that I don't have to prove myself to the rest of the lawyers on the panel. It's nice to have an investment banker, to have a chartered accountant, strategy expert, etc., talking on this topic. And then I can just chip in the legal bits. But I would just say that
the learned ones will do it. The rest of us will support. We're just figured. Femi, am I right?
So we're
absolutely correct.
So I think honestly, I think it's really special to have them both here, to give a different perspective, so that we're not as lawyers not always just speaking to ourselves. So I really think it's a distinct honor to have them here. And just to kick off the discussion, I was going to say that, for some people, not sure if I'll admit to it, but for some people who were involved in the last set of banking consolidations and banking capitalizations, people already have a preconceived idea about the whole process. Preconceived, would I say, prejudices, good or bad, about the process based on either what they went through previously or what they have heard about the process previously. I think the whole landscape has changed a great deal. I think it's a different central bank. I think our regulatory landscape is very different. And so I really will urge people who are at this session to really come to it with an open mind, and to let us hear from our experts here, about sort of how the whole process is and what they think. And so my first question really is that, this current administration has an ambition of $1 trillion economy by 2030. And as we all know, the banking sector underpins a lot of this. And it's important that they are able to have enough capital to be able to support this type of economy. And so as a result, obviously, the banks have been mandated to increase their share capital. So first of all, I'd like to ask, maybe I'll go with Femi first. He's first on my screen.
Okay.
How you think, why you think this is important, and how it can serve to maybe attract FDI into the country as well. So foreign direct investment into the country.
Okay, thank you. Thank you very much, Yinka, for asking that question. I think it's extremely important. I think Nigeria is getting to the level, or to the stage where, we need to have a banking sector that can take the growth that is expected of the economy. Of course, one might say we're not experiencing that now, but the reality is that I am very optimistic that that's going to happen. Now, from an FDI perspective, what I would say is this, is in two folds. I think the FDI is going to come in terms of the recapitalization itself, because some of the banks are already in the market trying to raise the funds. And to some extent, I would say some of it is coming from the foreign investors. While, of course, I would say majority, and I'm not sure whether Suru will agree, but a significant amount is still coming from Nigeria, but of course, a portion will come. But I think what is even more important is the aftermath, what I would call the indirect, which is the fact that the whole essence of this recapitalization is to allow banks, to do more things that they're currently doing. And I think two key areas that I will look at is funding and financing infrastructure growth. And my view is that, and we have significant infrastructure gaps. And my view is that if they can look at the area of transport, the area of healthcare, the area of energy, we will see two fronts, the banks funding that, and also FDI coming from an equity or quasi-equity perspective to also collaborate, whether it's in form of PPP or in form of direct equity. So I would expect that will be the follow-on impact, which will have a positive direct impact from an FDI perspective. The other one I think will happen is probably the funding of the MSME in terms of retail and, medium scale enterprise. One thing that is happening now is our credit bureau is improving. I won't say it's, 100% where it should be. And of course, we also have the singular method of identification now. And I feel that once we can enhance all of that, you would see a lot of funding going to this sector. And I feel that that is where the key growth that we really require will come from. And my view is that once you can have those two, we would see the direct, from the recapitalization, and you also see the indirect from the funding of infrastructure and also MSME. That's my view, and I think it's just positive news for Nigeria. Thank you.
Thank you. Suru.
Yes, Yinka, thanks. And again, thank you. It's always good to have conversations like this. I think that the FDI flow and how this recapitalization can help galvanize it is something that has been on almost every mouth. And like Femi said, some of that money will come from outsiders looking in. Others will come from insiders who have resources in foreign currency, who then feel that this represents an opportunity that is credible and worth their while. So, but it must be stated that FDIs, like all forms of capital, always demand respect. And it is not enough to have a recapitalization to fund. It's important to have a policy environment that nurtures. It's important to have confidence in the system. It's important to have less volatility because capital will not tolerate uncertainty. And so it's the banking recapitalization, it's a very, very good thing. We think that, yes, it's a different market than what we had in 2005, but because I mean, I can go on and compare both markets. In 2005, you didn't have a pension industry. In 2005, you didn't have a rebounding and very, very strong debt capital market. So from in terms of what capital can do within the country, there are more alternatives. So it's always important, therefore, to have a policy environment that nurtures, not one that scares.
Absolutely. Thank you. Absolutely. I couldn't agree even more. And what I always also like to do in terms of kind of giving a little bit of context to the importance of this. So I like that Femi has touched on the importance for the for specific sectors, but also just to mention that, essentially we discourage people from keeping money under the beds. And so our money basically should be in the banks. Mm-hmm. And for that reason, it is very important to have a stable banking system. And for that reason, banks have very strict regulations. So for the banking lawyers out there, there are very strict regulations around capital and how you have to keep capital against transactions that you do. And so there are restrictions around sector limits, for example, and borrower limits and all of these things. And you have to have a certain amount of capital against different types of transactions, against loans, against different things. And so for them to be able to lend to larger transactions, it's very important that they have adequate capital. And so therefore, the sort of level of capital that the banks have really, to some extent, will determine the types of transactions that we do and the size of our economy and the types of things that they can do within the economy. And obviously, if a bank fails, it has catastrophic implications to depositors, etc. So this is actually very important, a very important topic. And the way that the banks go about it is very important. Many of you will have heard of the sort of Basel Accord, the Basel II or Basel III, etc. All of that kind of deals with bank capitalization. So I'm just throwing this open in case anybody wants to kind of read up a little bit more about some of these things. But I think it's just really important, and it's good to hear what you said about the FDIs, I couldn't agree more about the fact that there has to be consistency in policy, because that in itself can work against capital raising. So I guess my next question would be that we've seen that, so the banks are able to do this capital raising through simply bringing in more capital, bringing in more equity. But there was also an option for the banks to do it through M&A, for mergers of banks. I'd be interested to hear your views on this. What you think, how significant you think this will be in this particular round of bank recapitalization, and also maybe some of the pitfalls, because I know some of the ones in 2005 are not really seen as a ringing success. So maybe some of the pitfalls that you think that are we need to avoid. So not likely to see, need to avoid.
Okay, should I go first?
Please go ahead, Femi.
Oh, really? You wanted to go first? I was going to say, let Suru go first this time.
Okay, no, Suru, please go first. Go first.
Thanks, Yinka. And look, you touched on a very important topic. When the CBN released the guidelines for this current recapitalization, it was very clear about the fact that, look, there are many options available to institutions affected by the release. And one of them, yes, is raising money. But again, there is the issue of M&A, but then there is also the issue of license redesignation. Now, you will notice that in all of that, the policy intent is not to see through the situation of any bank. So the options available are wide, and unlike in the past, where in 2005 it was you're just going to have a particular capitalization when you are out of business, or else you merge with another person. This season offers more options. Now, but having said that, will we see M&As? I think that M&As will continue to, and it will happen not necessarily as a regulatory imposition, which is typically better, but I think that regulatory imposition or regulatory-led M&A will be the last resort. So it is therefore appropriate to say that yes, again, what a bank comes up with depends on their ambitions, its owners. It depends on the possibility. For example, if I say that as a bank, I don't mind remaining at the level where I'm at, provided where I am capitalized enough to do what I'm willing to do, then this whole noise, if you like, will not affect such an institution. Because the CBN is not compelling any bank to upgrade its license. It's only saying that these are the classes of licensing, whether it's international, national, or regional, or even non-interest, or merchants. So if you choose to stay at any point on that ladder, just make sure you're adequately capitalized to achieve that objective. Now, does that then mean that is that an ambition stifling move? No, because look, the CBN did not only give all of these options; it gave a 2-year timeline. That 2 years then give people opportunity to weigh their options and determine the most appropriate course of action. So today, it can be said that there are about 28, less than 30 banks. In 2005, there were about 92. And so when you begin to talk about comparing times and seasons, I think that the options are more, but yes, there should be and there could be mergers and acquisition. Now, but remember that these mergers and acquisitions are not regulatorily determined. This one, you open your eyes, look at whoever the suitor is or whoever you're hanging with, and determine. And the good thing about this is that it's not forcing you into adopting a strange culture. you have the opportunity to determine that. It's not forcing you to lay off staff. You have the opportunity to determine the scale and size you want to operate at. So I think that M&A is still a veritable tool, and it will happen. But the extent to which it might happen may not necessarily be comparable to the previous season, in my opinion. Thank you.
Thank you. Femi?
Yeah, I'm fully aligned with what Surah said. I think my only addition is M&A is very pivotal and is one of the options and is going to be one of the solutions for some. But I'm also aligned to say that this time around, unlike the last time, I don't think there will be a lot of M&As. Let's say it as it is. We have the international, the national, the regional. I think those that might consider the M&A are the ones that might not be able to fully raise the required capital. But of course, they also have the option to downgrade, maybe from national to regional, and maybe from non-regional to even, merchant or non-interest. So my view, aligned with Surah, is that we will probably see some M&As and maybe even, CBN-induced ones, but I think that will be a last resort. But the reality is that it is important, but it would not be as significant as the last time. And like Surah said, this time around is, with your eyes wide open. You need to know who you are. There are so many factors, that you need to consider. And this time around is something that you don't, jump into. I remember the last time there were, M&As done in 2 weeks, which was really unprecedented. And we all saw the consequences of that. I do not believe that will be the case this time around. Thank you.
Yeah, no, absolutely. I recall that was when we lawyers now started giving opinions about the fact that a court-ordered meeting is not an annual general meeting, and we can call it in 1 day or 2 days in order to save.
Absolutely.
But to be fair, we also saw some banks that didn't survive, and that had an impact on investors and so on. So I love the fact that, that didn't survive weren't able to either to do something in the time, or maybe were more thoughtful about who they would partner with. And some of them did lose their licenses. So I like the fact that the point that you're making here, that actually banks can step down their license, and therefore that same impact and that same imperative, that same panic, if you like, shouldn't exist this time. And so the M&As that we see should be a lot more strategic and thoughtful. So I like that. I mean, the announcement that we have seen, at least that I have seen, is Providus and Unity, who have said that they want to merge. And what I like about this one is that the CBN has gotten, maybe because they've come nice and early as well, CBN has had a chance to look at the transaction a lot more closely than they were able to in relation to some of the 2005s. They've seen where the gaps are. They've tried to support the banks in the way in which they go about this, to block the hole, to put money in, and so on. And I think that that's really a different approach that's being taken this time. And I think it's really indicative of, I guess, the points that you've made, that it's a very different type of approach that's being taken in relation to M&As this time. So yeah, no, I'm excited about that. One thing I was wondering is, I wonder if some of the regional banks, maybe if they're in one region, will merge with another bank in another region, and we'll see what happens with that. But I think, like I said, I think it'll be more strategic. It'll be interesting to see what happens in relation to this. But in addition, what I saw was that last time a lot of the banks sought to raise capital, and then it was only towards the end when they realized that they weren't going to be able to raise sufficient capital that was the scramble for mergers. So assuming that a similar approach is taken, as I said, we've only heard about one particular M&A that's been announced. Assuming a similar approach is taken and people are looking at, okay, I'll try and raise first, and then if I haven't raised, I will look at M&A. Assuming that that was the approach that they were taking, how long do you think before the deadline, they need to really step up the M&A. So how long do you think that would take? When should we expect to start seeing the M&A activity that we're not yet really seeing?
Okay, I think my view is that CBN has started on a good note by, immediately they made the announcement. They told the banks to send their implementation plan, which they all did. My view is that the CBN, or my recommendation is the CBN should have those regular touch points, because so that we don't have a situation where, one or two banks are only deciding to do the M&A route 2 months or 3 months before the deadline. And I'm almost certain CBN will probably not allow that happen. My view is that, for a good M&A, you will probably need, I would even say 9 months to a year, as in the synergy, what needs to happen, the analysis, are you a good fit, are you a cultural fit, all those things kind of need to be assessed and ensure that no one is making any mistake. One of the key things is due diligence, for me, I think a good timing will probably be, let's just say 9 months to a year interval. So ideally, in my view, after the first year, you should be able to know, out of the 2 years CBN has given, you should be able to kind of assess whether the option of right issue or fresh offer is available to you, and you should start having discussion from an M&A subsequently. So if you think about it, that 2 years period is sufficient for them to, to do a good job. And my view from an M&A will probably be a year, and 9 months to a 1 year period. Sir.
Thank you. Look, the time to start talking M&As now. But the next best time is not later than 1 year before the expiration of this. And the reason for that remains all of what Tony has articulated. Again, we must, as a people, learn the lessons from history. If you are going to do M&A, you would want to know who your partners are. You would want to go into it from a position of at least balance, if not advantage. You would want to know the construct and the originality of the underlying assets. You don't want to go into a marriage blind. That's essentially what an M&A is. It is a marriage, but the season of courtship, I mean, some people tell you that the longer the courtship, the better the marriage. Some others say that is not necessarily true. But one thing is true, though. It is that an M&A where the parties are going into it with definitive intentionality, they tend to work better than those that are hurried and not fully thought through. You want to take time to look at the legal documents. You want to look at the financial documents. You also want to look at what the vision alignment is and what strategic alignments are between the parties. Now, if you do not do that and you are not paying attention to that, you are going to come to a position where, although you're married, both parties are practically looking at the door. And what tends to happen is a failed system. The CBN will not tolerate a failed. I think that's, for example, why you had the conversation. The CBN that I see, that the room I read at the CBN is, there is very little tolerance for systemic failure. It will do whatever it needs to do to avoid it, and it will do whatever it needs to do to force conversations between institutions. So I think M&As will happen, but it must necessarily happen early enough to avoid the mistakes of the past. Thank you.
Fine. So, so speaking from the lawyer's perspective now, what I'll say is that I loved your analogy about it being like a marriage. So I guess we lawyers, we're the priests that that are making.
I don't want to have you back at the table when the marriage is all done.
Where are the
When you have the priest back is for counseling.
Where are
And
the
because
priests?
we counsel anyways.
Some of us insist on counseling. You people, have you decided that you are going to work, that you can do this? Some of us are ready. And when you're going to get married, we're ready to carry out the ceremony. So I guess, but you know, we're often accused of being like, particularly transaction counsel, and maybe that applies to all the SBL lawyers. We're accused sometimes of being adrenaline junkies, that we basically jump from transaction to transaction. We're very keen to put a transaction together, to close the transaction, etc. And we literally just do that. We don't think about all the implications. So I think it's really important in this conversation that we've been having to just talk about the fact that what makes a good transaction, what makes a good merger, etc. How is it successful? You know, when we have our brag sheets, we talk about the transactions we close. We don't talk about how many are successfully still in existence. But yeah, I think it's
you don't count.
It's an important thing. So, but what we see,
it's important we also avert them. Yes.
Absolutely. And so, but what we've seen, obviously, is that the big banks have very quickly gone to the market to raise capital. And I think, you know, that was their strategy. Let's quickly mop up as much money as possible. They were probably closer to being ready to go to markets anyway. They already communicate regularly with their investor base and so on, and you know, carry out roadshows, all of those things. So they're very quick to do that. And I guess they're mopping up money that is readily available. But that will make it more challenging for the smaller banks. Because, well, maybe not. Great, I'm glad that you're going to disagree. But that will mean that the smaller banks are coming later. Maybe that's what I should say. So smaller banks are coming later. So what are the challenges that they will face? Or what are the advantages, if you think there are some? How would you think they're likely to be approaching this same imperative?
Okay, so look, first off is that in fairness to the big banks, a number of them preempted this move. They saw, well, you can say that they were prescient in their activities, in that they saw it coming. And they started preparing ahead of that announcement. I can mention the name of banks that were already ahead of the curve. And by the time that bulletin or that release came out from the CBN, they were practically halfway gone in terms of obtaining requisite approvals to get their transactions done. So to that extent, I think that time to market is, as much as it could have been an issue, is not necessarily that some people had unfair advantage over others. It's a matter of what exactly was your strategy and what is your strategy going forward. Now, I hear that practically every offer out in the market, and there have been about 5 of them, have done very, very well. It tells you that although the market is, although the shape of money is changing, people still have confidence in the system. So it will therefore tell you that if the current offers are oversubscribed, it must mean that there is still money for the other guys. But what we must bear in mind is that capital chases opportunities. So if they do not come out on time, and the capital, and of course the capital universe is always limited, there is only so much they will be able to get. But we also need to bear in mind that there are institutions, there are banking institutions in this country today, out of the 28 or so of them, not all of them are public companies. So there will still be a lot of private transactions, private placement transactions going on beneath the radar. So those are the things we need to pay attention to also. But I honestly don't think that one disturbs the other. but timing is key. Because what you may be competing with may not be bank capitalization. It may be some infrastructure fund or some other thing raising money about the same time. The awareness about the opportunities in the market is very, very entrenched now. And I think that's something to be mindful of. Thank you.
Yeah, and that's very true. That's very true. You know, even if it's not banks they're competing with, there are always people in the market and out of the market. And I know particularly when we do, particularly I would say when we do international capital markets work, the investment banks are always very conscious, particularly when it's the sovereign, that which other sovereigns are coming out at the same time and so on. So it really is something that you have to very strategically plan, but absolutely. Femi?
Yeah, I think I will say this again. I'm also aligned with what Surah said. I'll just add a few things to what has been said. I feel that like you call the lower cadre banks, the only struggle I see they might have is raising capital. And like Surah said, you know, capital will go for the one with the highest return on equity. And I think there's a direct correlation that the bigger they are, the more returns they tend to make. So chances are that in terms of successes, the bigger banks would probably have more success in capital raising. But why I say it might not be a huge disadvantage is they have the other option of M&A, and they have the third option of downgrading. So my view is this: yes, it might be a disadvantage and a challenge from a capital raise, while some might be doing private placement. But I feel that they have other options to look at if they should become unsuccessful in raising their capital through rights issue or you know, off of a sale. So the options are really there, and I don't think it will have a major detrimental impact being a small cadre bank. Yeah.
Thank you. I'm just going to ask, we are going to take questions. We're more than halfway through now. We are going to take questions. So please put your questions in the Q&A box so that we can take them when we get to that point. Just to remind you again that I think honestly we're very lucky to have Suru and Femi here today. They can answer legal and non-legal questions. So please go ahead and ask your questions. I think it's a great opportunity. But I will move on very swiftly now to my next question, which is really regarding, I guess, the difference. What are the regulatory measures, regulatory developments maybe that facilitate this whole process? It was something we touched on at the very beginning, and Suru mentioned something about pension funds, etc. But why is the climate different? What are some of the changes perhaps that you think will either support or maybe affect this whole process? But I guess in generally, I'm looking for the positives. Let me just say that. Femi, do you want to go first?
Okay. Yeah, I was hoping you would say Suru should go first, but I will go first. I would go first. For me, I think
honestly, the two of you.
I think the SEC, you know, is one. I think the SEC had a new comprehensive regulatory framework that was published in June of this year. And I think, you know, there was some level of details and guidance for banks, you know, holding companies, market participation. So, and I think that brings transparency and that brings clearness. And it also brings, you know, potential for investors to say, look, Nigeria has a clear plan in terms of what the future holds, and we are navigating towards, you know, enhancing our market size. And I think that, you know, SEC regulation and framework is extremely critical to the growth that the banking sector is looking at. And I think I would say this, that we are seeing an alignment with all the regulators, you know, as in the alignment from a CBN perspective to a SEC perspective. And I think that alignment is really critical for the success of the banking sector and all the other sectors. And I think that's my view on that. Thank you.
Sir?
Thank you very much, Femi. And look, when you're talking about banking recapitalization, so the 2 or 3 critical regulators are the CBN, the SEC, the NGX to a limited extent, but more importantly, appended to the SEC is the FCCPC, right? And that's the Federal Competition and Consumer Protection Council. Whilst it executes its role largely with the help of the SEC and the courts, we cannot take away the fact that it is also an anti-competition watchdog, and that is important at this point. But let me say that we should commend both the CBN and the SEC on their efforts to make this recapitalization season as seamless as you know. Apart from raising capital and going to get approval, first there is the issue of the green shoe. How much of a subscription can you admit? Now, for a CBN that has practically multiplied capital, minimum capital by about 2x or 2.5x, or in some instances 3 times or 4 times, you would think that a 15% maximum green shoe permission by the SEC is a hindering, a stumbling block. But the SEC, without necessarily laying so much by it, is even more open to listening. Because, look, what would be the benefit of getting an oversubscription, only taking 15% of it, only to come back to raise another capital within the 2 years? But so I hear that there are now a more open, more willing listening ear at the regulatory front to see what can be done to accommodate the peculiarity of this season. And I think that's commendable. I also think that the CBN capital verification procedure, which is another major delay factor, typically, because look, when I put my money into a public offer, I want to be able to see my shares in my CSCS statement very quickly. And if I am not seeing that because CBN is still doing capital verification, SEC has not yet approved because back to them, all of that makes for investor dissonance, right? I believe, and I've been told, and I know that both the CBN and the SEC and the banks are working together very, very ardently, for want of a better expression, to make sure that all of those delays are minimized, if not eliminated. And we're beginning to see that because look, you close the public offer. You are already saying, okay, so when is allotment happening? And they're saying, you know what, this is what we are doing now. They are not saying we are waiting for CBN to do capital verification. Capital verification is going on. And the SEC is saying, look, I'm doing my job simultaneously, that when the CBN is ready, I'll be able to take that on. I think that given our recent experiences or past experiences with regulators and all that, I do not think that the regulators are the problem this time around. I'm hoping that this will continue and it will go beyond the banking sector. Thank you.
So I sat at, I was on a panel, so this is my turn now to say, Suru said exactly what I wanted to say. But I'm just going to say that I was on a panel discussing some of this stuff a little while back. And I know that the issue that you touched on just now, Suru, i.e. the capital verification, the delays, all of that was something that was discussed. And it was discussed in the context as well of one of the banks that was actually offering their rights issue at a price higher than in the market. And so not only were you getting at a price higher in the market, but there's also the delay. If you buy on the CSCS, within a couple of days, the shares drop into your account. Sorry, buy on the exchange, drop into your CSCS account. with this whole process, there is, even after you've made your application and made your payment, there's a delay due to capital verification, other approvals, all of that. So that I know is sometimes a bit of a deterrent. So it was good to hear what you're saying about how the regulators are really working together and are being a little bit more systematic in relation to kind of reducing that delay. So I think that's great. I was going to ask you if you could explain a little bit clearer what the green shoe is. I'm just not certain that everybody on the call will understand it. But I think we'll see whether any questions come up on it. And if they do, then I'll ask you at that stage. But if not, let me not assume people don't know what it is.
No, let me just mention now that typically when you do a public offer, the SEC rule allows you, if you say you want to raise $1 billion, you can only, if it's oversubscribed, you can only take 15% of the issue size as additional, meaning that you can only take 1 point of the excess. And that has been a reason why you will see the incidences of returned monies before now. So I think that there are conversations around that and how to make sure that there is some flexibility in capital, my way of saying, in respecting capital, to know that just because I'm available today doesn't mean I will always be available. And if I'm needed, I'd better be taken and used. That's capital speed.
Wonderful. Thank you very much. Okay, so I'm going to take, well, let's see. I might be able to take 2 more questions, but possibly only 1. So what was my last question? So, okay, so if, let me just check. Okay, so this is a question. Do you envisage a situation whereby the current recapitalization process, and in particular the M&A, will prove sort of detrimental to, I guess, maybe the institutions? So, for example, is it likely to lead to job losses, stifling competition, that kind of thing? What are your thoughts around that? You've mentioned FCCPC. I was happy to see that.
Femi is the strategy chief. Does he want to go first?
Okay, let me go for it. I personally feel that there will be some very minimal level of job losses, but nothing significant. And here's the interesting thing. I dare to say that we saw, we moved from 89 banks to, I think, 24 at that time. And yeah, there were some few job losses, but I would like to say that even the banking sector has employed probably more people now than as at that time. So when you look at it, it's really still down to expansion. But here's a bigger issue, the bigger advantage I see. With this recapitalization, not only will it expand the banking industry, it's going to actually expand all other sectors. There will be job creations. There will be funding for, small and medium enterprise. There will be funding for infrastructure. Look at what has happened to Dangote Refinery. Dangote Refinery came to be because there were multinational funding. And we are talking about thousands of people being employed as a result of, Dangote Refinery coming. I see, the same happening where banks will now be able to do big projects and be able to do, things like that will bring more employment. So my view is this, it's going to have a very good impact on banking and other sectors. So it's, in my view, just, good news going all the way.
I was going to say that the problem was never going to be the bank recapitalization. The problem had been technology for some. But look, the bigger the banks get adopting technology, the more they're able to find room to absorb people who ordinarily have been redundant. I honestly do not see how this will lead to skill jobs. Right now, the banks are grappling with the exits created by the Jackpot syndrome. So I mean, you're not going to let experienced skilled staff go. They would find uses for them. So personally, I don't see this resulting in job loss.
Okay, yeah, thank you. Thank you, the positive note that you've both taken on this. So I'm going to take some of the questions now that we have, that the participants have raised. Please, if you have questions, please do put them into the Q&A box. So the first one, in simple terms, what is bank capitalization and what factors are responsible for the action, presumably of the CBN? What other options are available for banks that do not wish to go this route? We've touched on it a little bit, but I think that maybe we should just, if you're able to provide it in a few simple words, a sort of summary, then I think that would be helpful.
Yes, maybe I should make an attempt and I'll get help. I'm in good company. So. Bank capitalization is simply the extent to which banks have enough capital to conduct the level of business they do. So it is a way of saying, are you able to properly do banking based on your level of capital? Now, the CBN, in its wisdom and in line with international best practice, had evaluated the amount of credit in the system, the amount of businesses that we need to be able to support as we go forward, and then said, look, based on the release of Basel 1, 2, and 3, like Yinka said earlier, are capital pronouncement, amongst other things, capital risk management, technology. The Basel is like an agreement of all banks, or all international, provide is a basic standing operating procedure of system for banks globally, without disregarding their local context. So this capitalization is the CBN's way of saying that if we want to play where we should play, we need to have more capital. It's like saying, if I want to travel by air, I need to get a ticket. And the ticket depends on the distance I'm going. The distance we want to go requires a higher level of capital than we have today. If I am going to be able to lend to working class professionals who want to buy cars, the price of cars have increased. I need to get more capital to be able to properly play in that space, such that even if some of them lose their jobs and they cannot now pay back as planned, and they need to pay over time on over a longer time period, I am still able to absorb the shock and handle the bad load, so that the country is not at risk, the economy is not at risk, the institutions are not at risk, and we do not have a situation on our hands where the economy collapses on us. That's my way of trying to simplify that. I hope I didn't complicate this.
Absolutely, thank you. And I like the way you simplified that. Thank you. Femi, do you want to add to that, or do you want to take the second part of the question, which are what are the options available?
I'll add to what has been said, and I'll probably use the Ghana experience from where they did theirs a couple of years before us. And it's interesting that, you know, exactly what Suru said was what played out in Ghana. So subsequent to the bank recapitalization, they had what you call the recent sovereign, debt restructuring that affected a lot of the banks. But because of the recapitalization, they were able to, you know, absorb those shifts and some of those losses. And I think recapitalization is in two folds, really. One is, you know, to be able to absorb any losses, and at the same time also create the opportunity for market growth. And I think it's going to probably do both. The options available are the things that we've already discussed, really, which is the M&A, which is the rights issue, which is the offer, private placements, and all of that. The reality is that we just don't have an option. We need to be resilient. We need to be big enough to be able to do those deals. I did mention the Dangote refineries. There were some of those loans that you'll be like, that, international institutions funded that, Nigerian banks could not are funded, even though it's a Nigerian project. So those are the situations where we want to bridge that gap and just ensure that we are also, participatory in this market. Thank you.
Great. And this next question is an interesting one. Thank you very much, Femi. This next question is an interesting one. It says, so we've talked about the fact that the regulations gave a lot of flexibility, a lot more than the previous ones. It allows you to downgrade, it allows you to do various things. But the question that this person has asked is, if the person fails to raise capital, fails to carry out M&A, and does not apply to downgrade their license, do we think the CBN will automatically downgrade them to whatever license they might be able to afford? Or will they simply revoke the license? What do you think?
For me, okay, sorry, you go first.
Please go ahead. Please go ahead.
For me, I really cannot talk for CBN, but with precedents, I probably feel the revocation of license will probably be the options they would take, because it is crystal clear. If you don't do any of those options, then it's quite irresponsible. You definitely, and of course, one of the things I would say is that we have responsible bankers, and one of the responsibilities to their shareholders and is to make sure that they preserve value and increase value. So for that reason, I would want to say I definitely think there won't be any bank that will be in that category. And there will be banks that would definitely want to pick one of the many options that are available to them. But if someone decides to do the unthinkable, I think CBN will probably also do the needful. Thank you.
Suru, do you agree?
Look, I cannot even, there is nothing to add other than to say that we should avoid making, and no institution should make itself vulnerable to that level of uncertainty. This current CBN has been very, very clear about its pursuit of independence of judgment, and we shouldn't test that resolve.
Absolutely. I think that I would just say, so I completely agree with this. And I also think that, the discussion that was had earlier about the fact that I think CBN continues to engage with the banks. So I'm assuming that it won't be a sort of drop dead date. I mean, the last day is a drop dead date, but I think the CBN would have engaged them, would have said, if you people don't do this thing, this is what's going to happen. So make a decision. So I do think that they're kind of trying to midwife this process a lot more than last time. Then the next question I have is, what other, and I love this person because I had many sleepless nights thinking about this myself. What other innovative structures can affected banks explore to raise required capital, or had the CBN options are the only available solutions? What I'll say is that even some of the solutions I came up with, which I thought were fine, the banks were like, leave me alone. I don't want wahala. I don't want some highly structured issue. I don't want problems with CBN. But let me ask, and this is our last question because we really are almost out of time. But so let me ask the others if they have been able to come up with innovative solutions.
Look, no matter how you look at the nature and the color of the money, what matters to the CBN and to bank operators is that you have a defensible, workable mechanism. Now, remember that what qualifies as equity capital or shareholders fund is very limited. So the only other option that people have probably not paid attention to is the retention of profits in the first year or two, provided it is audited and the CBN can see it is not from FX revenues, meaning that if you perform well, you make enough money as a bank, and you choose to then use that money instead of paying dividend to recapitalize the organization, that may pass. But it's better to just go all out, do all you need to do, and follow the same old tried and tested route than to experiment, and the experiment fails when you can't take corrective action. So I think that, yes, there may be different ways by which people would want to look at this, but as far as the CBN is concerned, equity and profit retention, as well as M&A, are the courses of action they laid out. But again, the human mind is a machine. It brings up ideas, and nothing says that a good idea won't fly. Thank you.
Can you close us out?
Yeah, I was going to say that that's a brilliant question, and I would say this, and I will say it in a coded way to say that M&A actually has more advantage than what we think. And I'm sure Suru will agree with me on that, in the sense that M&A is an option, but also allows you to be very creative. And it's for people to explore and see all the advantages of M&A. I won't say more than that. You probably need to pay me to get more from me. But but M&A has these huge advantages, and I would say that people should explore that as a very innovative way. Suru understands what I'm saying. On that note, I would like to say thank you.
Thank you, Femi. I was afraid to solicit lawyers. They are solicitors themselves.
Thank you. I completely agree. And I would say go and read up also on Providence and Unity. So thanks for that. Bukola, over to you.
No, this has been one very exciting session. 1 hour where we got to tap into their wealth of knowledge for free. Anything beyond that, you guys have to pay, as you heard. So a big thank you for doing this with us. For sure, it was, it personally useful for me, and I can imagine for the rest of our attendees who took their time to join us today. We also had some really important people join us. I see the immediate past chairman of the NBA-SBL, Dr. Adeoye Adefulu. Thank you so much for joining us on this. Mr. Labi, Mr. Daniels, Mrs. Edo, a big thank you. I know you had a hard stop at 3, but you also got into this conversation with us, right? And I'm really glad how it turned out. I'm just going to take a minute and say if Dr. Adefulu would do us the honors of saying thank you. This used to be your thing and your initiative. So, Dr. Adefulu, if you're available, please.
Bukola, it's like you read my mind, because I was going to send you a message that pick on him. He should do the honors.
Yes.
IPC, we're calling you. Please unmute.
Why are you unmuting me? Please.
Because you can't hide. In fact, unmute and put your video so we can see you, because we're missing you.
Good afternoon, everyone. Thank you for unmuting me, and thank you for the fantastic moderation, obviously, by Mrs. Edu, and to our guest speakers. We're really grateful for sharing your knowledge and expertise. Thank you very much. That's me escaping.
Thank you. A big thank you to our attendees who have come from various industries to join us today. Thank you to our panelists again. As you all know, this is a weekly series, an initiative of the NBA-SBL. So we have other exciting sessions, going on next week, every Thursday at 2 p.m. These sessions are educative, insightful, and we get to get advisory at zero cost. So please continue to tune in and join us. And a big thank you again to our panelists for a wonderful session today. I don't have the opportunity to recap because we have to let you go, but thank you. It's been a very wonderful session today. We really do appreciate you for honoring us.
Thank you.
And
Thank you very much.
We will call on you again once this process continues to unfold.
No worries. Thank you very much.
Thank you.
Thanks for having us.
Yeah. Thank you.
Bye, everyone. Thanks.
Bye.
Thanks, Jamie. Take care.
Yeah. Bye.
Bye.